Hello, everyone. This is Steve from Beyond the Trades, also from the microefutures.com/equities/etc.com trading room, two trading rooms in one. I just bring that up for those of you listening who might not be a member of our trading community, which is growing by leaps and bounds. I think last time I looked at the numbers, we are up around 800 members combined. So I just want to give our crew a shout out. It's a great community. And we have both experienced traders, professionals, as well as new traders and mid-level traders. It's something for everyone. So enough of my promo for the room. Occasionally, I will have videos, to do some videos. Most of you will know me, especially if you're new to the room, as the person behind the scenes running the administrative and business side of the trading room, our podcast, Confessions of a Market Maker, our social media business development platform. But I also do trade. Been trading now going on over 11 years, and the past 9 years I pay taxes on my capital gain. So I would say the past 9 years, successful trader. Last year was my best year ever trading, which I'm proud of only because it was a bearish market. But like many new traders, I did struggle early on in the first 2 years. I probably lost more money than the trading room combined those first 2 years. And just a quick background on myself. For those of you, again, who are new, who might not know my background, I was at a high level, successful corporate career for approximately 23 years. I had businesses on the side. I'm a serial entrepreneur also. So while I was working corporate, I was side hustling in business. I always invested my own money rather than manage it in a 401k, which a lot of folks will say is not the proper thing to do because you're not getting the matching contributions. So I did have an investing trading background, more long-term holding. So it's definitely not day or swing trading. It is investment trading background. But I did well with my companies, sold them. I was too young to retire, moved down to Florida, got a little bit bored. So I decided to trade full time. A little bit over a decade ago, partnered with JJ and Ray and some other side businesses that I'm involved in and real estate holdings. And that's where we are today. So I do know what it takes to day trade, short-term trade, swing trading, as well as long-term investing, and whether it be stocks, cryptos, futures, indices. So I do have some knowledge as to what I speak about. Now, I'm not going to discuss trading strategies. I have other videos in our trading room specifically for that. The point of this video or podcast, whatever you want to call it, since there's really no video other than the list of topics I'm going to discuss, is things that I've noticed in our trading room that many individuals might get wrong. And it's just not our trading room. It's also that I see on social media. So an example would be the JJ or Ray in the trading room, and Ray runs our equity side of the trading room, or others, right? JJ, Ray, Elsie, Eric, Mr. God, Dennis over in equity, so many, and I know I'm leaving out so many other individuals, Marco, so many other individuals that help us, right? Will discuss a topic, whether it be on Zoom or whether it be in chat, and some get it correctly, what they're trying to say, and sometimes others do not. So I just want to make sure that I touch base occasionally with these videos on what I see. And again, it's what I see. Trading is never black or white. There are so many different types of traders. I may see things one way based on my experience the past 11 years versus others, because in trading, you never blindly copy someone else. There has never been a successful trader that I have met that has 100% blindly copied someone else's strategies, setups, and even thought process and concepts. Now, there are as many out there that have used different concepts from different individuals to form their own mindset for trading, and that's usually the proper way. So I say that knowing that whatever I say today, take what you consider good that can work with your style of trading. Don't compare it to anyone else's style. Compare it only to your style, and then discard what I may be discussing that simply does not work for your style of trading. Again, don't compare, right? Because you're eventually going to develop your own style, which is going to be bits and pieces from other individuals. So the first thing I want to talk about is bias in trading. Now, you're going to hear individuals say, well, it's almost impossible not to have bias in trading. I think the market's going to go up. I think the market's going to go down. I understand that. I totally understand that. I have bias at times in trading, and I'll give you an example. All right. My bias is looking over all the economic data, right? Inflation, CPI numbers, Fed rate hikes, right? If I had to guess, I would say that I'm probably short biased for the market, that the market should be going down. But I've learned over the past 11 years, what I think and what I feel is usually wrong 50% of the time. And that statistic is probably true for every guru or expert out there, right? No one knows, right? They're using data. Even the best traders, investors in the world are wrong up to 40% of the time. That's a lot of time being wrong. So be careful getting biased, even your own bias. So although I might feel the market should be going down, right? I've been long in about 5 or 6 swing trades since early January, and I've been profiting. Okay. Do I think the market should be going up? No. Am I going to sit on the sidelines when I'm looking at certain charts of certain individual stocks that are going up? Absolutely not. My job as a trader, day trader, swing trader, I'm not talking about long-term investing now. I'm talking about day trading and swing trading. My job is not to be right. My job is to make money. All right. And I play the reaction of price on a chart, or price to news, or price to an economic report, rather than try and predict what price will be on the chart prior to an announcement. So I react versus predict. All right. And that is such a key because I see so many individuals, even in our trading room, especially on social media, all right, who just feel this market is going to fall off a cliff. It is going to just go down and tank. They could be right eventually, but they are sitting on the sidelines right now, or they're shorting based on that feeling or prediction they heard others make who they feel know what they're talking about, and they're missing out on a stock market that has been going nothing but up. Well, I shouldn't say nothing but up. There's been a lot of pullbacks, but a stock market that has been going up pretty much since October, definitely since January. So why miss out going long? Because if the market turns around and your feeling is eventually right that it should tank, you can then go short. All right. And again, I'm not talking day trading now, because for day trading, we simply play price on a chart at that time. You know, you talk about inventory, you talk about supply. On the equity side, inventory supply is pretty much support and resistance. In essence, they're the same thing. Pretty much. I mean, obviously, there's some cases that you can make, you know, a case that they are different, but the levels, the key levels that a lot of individuals are looking at. So I just wanted to explain that your bias is going to get you in trouble. The turning point for me was when I finally admitted to myself that what I think about the stock market, what I think about stocks, no one cares about on Wall Street. And it doesn't define me as a trader. All right. What defines me as a trader is, am I, at the end of the day, am I making money or not? And I don't mean at the end of a particular day, because we trade out process. We don't trade result oriented. I mean, at the end of the day, let's say at the end of each year. All right, is it a good example? And I'd rather make money than be right. So once you take that pressure of always having to be right, it really helps. And I bring that up because I see in the rooms, our trading rooms, so many new traders have to be profitable, not only every day, but every trade, even if they're just taking 1 or 2 points, because they just have to win. They can't try and let a trade, okay, go, right? You know, a trade run, all right, because they are afraid of giving profits back. There is nothing wrong with scalping for 1 or 2 points if that is in your A+ setups and you have a legitimate reason to exit the trade. That something in price, something on a chart is telling you to exit the trade. If you are only exiting the trade because you're afraid of giving money back, or you want to have that win, you're trading because you're results oriented. And no, or hardly any traders will ever succeed long term if they're trading being results oriented versus being process oriented. So again, don't get me wrong. Steve is not saying stay in a trade forever. What I am saying is, if you're just looking to lock up 1 or 2 points out of fear, Mike Bellafiore at S&B Capital says it best. The problem with new traders, and I'm quoting Mike here, the problem with new traders is not that they give back gains on winners. The problem with new traders is they do not let their winners run when price and chart dictates that they should stay in the trade. So that leads me into the next bullet point on the screen, which is A+ setups. Your A+ setups, the setups that you know statistically give you an edge. How do you know statistically a setup gives you an edge? You don't guess it does. You don't think it does. You have either back tested it, all right, especially on the equity side, because there's software to do that. So you know that setup over the past 90 days, over 100 similar setup patterns, all right, have been successful and gives you a positive profit factor edge of at least 3 to 1, let's say risk versus reward. And I'm talking about back testing here. Or if you're on the ES side and you don't have the software in futures to automate back tests, you do it manually, keeping track of statistics, and we'll talk about that a little bit later on. Okay, that's how you define if your A+ setup is giving you an edge. So if you have an A+ setups, and that A+ setup is based on a pattern with certain profit targets and levels based on patterns or certain supply areas, all right, support and resistance areas, whatever your A+ setup is defined as, then when you're in the trade, you simply follow your if-then statements for that A+ setups. So an example, if price does X, you will do Y. For whether it goes up or it goes down, you'll know before you even take the trade how you're supposed to handle the trade. So it's no more, oh my God, I'm up a couple of points, let me take profits. That's panic. And if you have an A+ setup, okay, there's no panic because you've back tested it. Doesn't mean you're going to win every trade. You're probably going to lose 40% of the trades, but you have a predefined exit area based on your A+ setup strategy. So what I see in the rooms, I see folks taking 1 or 2 point profits, nothing wrong with that if that's part of your A plus setups. There's nothing wrong with having a scalping strategy as one of many different types of strategies you have. But okay, what I see in the room is folks just take those 1 and 2 point setups because they're results oriented. They have to have a win every trade, or every day they must be green. But and they'll go 3-4 days and they'll be up 10 points. Nothing wrong with that. However, then on the 4th or 5th day, a trade will go against them and they'll panic, and they won't take a small loss because mentally they're not prepared for that small loss, and they'll wind up taking a 20-point loss, and they'll wipe out those 3 days of small gains based on the fact that they emotionally tilted, which everyone does as a new trader. You're not immune to it. It's going to happen until you address those mental coaching issues. So the point is, you need to have some trades that run on you for 10, 15, 20-point profits to offset while you're learning to trade and deal with the emotional demons all new traders have, those losses where you do panic, because you're not gonna get out of every trade with those tight stops. Are you supposed to? Absolutely, because it's part of your A plus setups, but we're human beings, and especially while learning. So what I'm saying is, it's okay. Take those 1 and 2 point profits, all right, if your A plus strategy dictates, but don't exit them just because you're fearful. There is no fearful in an A plus strategy that you back tested to show to be profitable. Now, if you don't have an A plus setups, you really shouldn't be trading with much money. You shouldn't be. You should be going very small amounts or funded accounts, and you should be working on developing those A plus setups so you can have that confidence to trade it accordingly. Now, again, don't get me wrong, one of several A plus setups might be a scalping strategy. All right. And then you just simply follow your scalping strategy. I'm just pointing out what I see wrong in the room. All right. I see people happy on Monday, happy on Tuesday, happy on Wednesday, taking their small 1 or 2 profits and exiting for no reason other than they're results oriented. And then they're all sad and depressed on Thursday and Friday when they take a big loss and they wipe out all their gains. But had they stood in some of those trades from Monday, Tuesday, and Wednesday, a few of them would have ran on them a lot, and they would have had a nice cushion of profits to deal with going into Thursday and Friday. So hopefully I'm making myself clear. Now, this does not go against anything JJ or others are teaching in the room. Not at all. I'm just explaining what they mean by locking up those 1 or 2 points. Just be sure you have a reason. And remember the Mike Bellafiore quote, and he teaches new traders for over a decade. The biggest problem with not new traders is not giving back their gains. Everyone does it. Even the most successful traders will do it. The problem with new traders versus an experienced successful traders, they don't let their winners run when there's no reason to exit the trade. Okay, so that's A plus setups. That's a little bit what we talked about profit taking. And there's so many different ways to handle trade execution. You can, sell half, lock in profit, trail stop the rest. So again, I'm not talking strategy. I'm not talking just blindly cover your eyes and go long and don't exit trades. I'm not saying that. You have to manage the trades, and there's ways to lock in profits to let your runners run. There's ways to just get out of that trade. Just because you have a target of, let's say, 5 points, doesn't mean you have to let the trade run to 5 points. If price on the charts are telling you it's not going to reach 5 points, get the hell out of it and lock up your win. So don't take what I'm saying wrong. Okay, so that's profit takers. We talked a little bit about being results oriented. I cannot stress how much of you all think you must be green on every trade or green on every day. And you define your day based on whether you're profitable or not. Okay, get over it. The best traders in the world will lose 40% of the time. That's a lot of losing. You've got to be okay with losing money. You have to be okay with a losing trade. You have to be okay with a losing red day. Of course, you want to keep them small. That's the whole point we discussed of having A+ setups. But you have to realize out of 10 days, if you're an excellent trader, out of those 10 days, you're probably going to have 6 winning days and you're going to have 4 losing days. But you want to define your winning days as much more profitable than your losing days. So understand that. Don't be results oriented. Did you follow your process correctly? Because if you didn't follow your process correctly, doesn't matter what you did in the trade, and your process is based on an A+ setup, if then statements, if you don't follow the process, right, you should not be happy with yourself on that trading day. You can do everything right and have a bad trading day, results wise, meaning profit and loss wise, but yet you did everything properly according to an A+ setup that you know statistically you have an edge in, right? So understand that. Understand that. That's the biggest key. And if any of you are still struggling with those mental issues, that you have to take those wins, right? You might need to get some coaching, like from Kim Ann Curtin. And I know we have that program in the room that you can join her program. And I highly recommend it to our traders. Just take it for 30 days. The 30 days will help you immensely understand why you're acting out on having always to win in trades. Because what we see is, and it's a paradox in trading, and Kim can help you with this. When you are trading very well, when a trader, especially new traders, trading very well, they'll stop. They'll stop in the morning. They'll be up, but they'll stop. They're trading in the zone. Everything's going right. They're seeing and reading the market well, but they'll stop. They'll stop out of fear of giving back. Yet, and they'll stop for the day. Yet, when they're trading horribly and they took a loss because they have that mental thing that they have to be green that day, they'll continue to trade up until 4 o'clock. Up until 4 o'clock, just to get back to even. Usually wind up having a monster bad day. So they continue to trade when they're trading poorly, when they're not reading the market well, when they should be stopping. Yet, when they're trading well, they stop because of the fear of giving back. And by stopping, they prevent themselves from having a monster good day when they're in the zone. The paradox is they got it backwards. You don't stop trading when you're trading well. You want to continue trading when you're trading well. You have no fear of giving money back. Maybe you do like I do. If I'm up real big in the morning, I'll say to myself, if I give back 25% of my gains from the morning, I'll stop, right? So at worst in the afternoon, I'll still have a very, very good trading day because I'll be up 75% because I only gave back 25%. Yet, if I continue to trade well and continue to read the market well, I might not lose in the afternoon and I might have a monster good trading day. So I'm not saying just be blind to it, but just put some sort of parameter is that allows yourself to trade when you're trading well. And then if you give X amount back, like I do 25% in the afternoon, I just stop. And I enjoy a really good day and feel good about it. All right. Versus only trading till the end of the day, only trading till the end until you get back to even when you're trading poorly and you should be stopping in the morning. Now, when you keep statistics in your trading, you'll understand this better and you'll be able to define that a little bit more. And when we talk about trading metrics in a little bit, I'll go a little bit deeper into what I mean by that. Okay. The next thing you have to understand, and we're on the relapse in trading section, is relapse. And what I mean by relapse in trading is, and we touched upon it, is when you blow up. You blow up a trade, you blow up your account, you blow up your funded account, you just do something wrong, you tilted and you made a mistake. And we tend to beat ourselves up so much on that, even new traders, like, man, I'm never going to get this. Everything JJ, everything Ray, everything Steve, everything LC, Marco, and Dennis, and so many other folks are teaching us in the rooms, and Eric and others, I'm just never going to get. because I blew up. I should know better, you know? You have to understand, and Dr. Brett Steenberger, who again is the mental trading coach at S&B Capital, prop trading firm on Wall Street, says it best. Relapse in trading is to be expected, especially if you're new. Very few new traders get cured of their bad habits all at once. And what he means by that is, and how he defines you making progress. And I've seen folks do this. They'll contact me and said, Steve, I'm just not making progress. I was doing so well for so many days or months and I blew up. I get those direct messages sent to me. And then I'll ask that person, okay, I understand you're feeling real bad today. You blew up. You were trading so well for so long. All right. When was the last time I asked them that you blew up? They might say, maybe it was 6 months ago. So I'm like, for the past 6 months, you've been trading well. You read the market. You understand what's being taught to you. So for the past 6 months, things have been going well and you just slipped today. All right. And then I would ask them, how in the past, prior to 6 months ago, how often did you blow up? How often did that bad habit raise its ugly head? And they might say, wow, I used to do that every week. So last year, I used to like every week have this problem. Then I got it under control and was for about 6 months and it happened again. I'm never going to get it, Steve. I'm like, I know it sucks that you just blew up and you're feeling horrible about yourself, but I view that as progress. I view what happened as progress. And they're like, what do you mean? I just lost a bunch of money. I'm like, but last time this happened was 6 months ago. Your relapses are happening further and further and further apart. That's progress. Okay. And that's what Dr. Brett Steenberger means by relapse rarely are cured all at once. But when they start happening further and further and further apart, you're on your way as a trader. Don't be results oriented, excuse me. You're on your way when your bad habits get further and further and further apart. Now, if they're not getting further and further and further apart, you have to be honest with yourself. You have to go back to the mental coaching issue, because yes, you can learn technical analysis, market profile, how to read TPO charts, the business side of trading, everything you're learning in the rooms. That's not the difficult part. The difficult part is mentally understanding what you need to do. So if those relapses are not happening further and further apart, that is why I tell so many folks now that, we partnered up with Kim and Curtin, just get a program for 30 days. It costs you less than losing one trade, and it can help identify these issues of the relapses not happening further and further apart. So understand, when you blow up, and it happens to all of us, ask yourself, when was the last time that happened to me? And if it's getting further and further apart, that's progress. And even if it's slow progress is progress. Next thing is the funded prop accounts, which are becoming the rage lately. And I know we have two good partners in Apex Trading in our room and Top Step Funding. And now we have TTP, Trade the Pool for our stocks. I know that's all wonderful, but really what's good about these prop funding accounts, and I know a lot of you are seeing dollar signs and you're going to get rich and you're going to be able to buy that Lambo. And yes, we've had a trader in the room, Mr. Gunn, make over $1 million in multiple prop accounts that he had in 2022. But he paid his dues. All right. And by paying his dues, which a lot of new traders are doing, it's best that you pay your dues in a funded prop account. Even if it's an evaluation, you blow over and over and over again. And the reasons why I say that is these evaluations, right? These accounts, our members get very cheaply. So the cost of blowing up a funded account while you're learning from JJ and others is a fraction of you losing your own money or blowing up your entire trading account. And maybe you have a small trading account and not even enough to be trading with your own money properly. So these funding accounts are excellent, not only for those experienced traders who, yes, they will get 10, 15, 20 evaluations, pass them, and then trade huge size and make themselves good money like Mr. Gudd did. But, and I appreciate those individuals and I tell them congrats, but these prop funding accounts are excellent for new traders that are gonna fail them and might fail them for months. Okay, but something's magical about failing them for months. Eventually you get the hang of them. Eventually you learn. Eventually you address those mental coaching, emotional demons. And then eventually you get to the point where a Mr. Gudd got, where he's able to be extremely profitable and not just passing the evaluations, multiple of them, but also once funded, making money in those accounts. So if you're not funded, all right, please, we have a dedicated funding channel room where they share best practices and tips. Go to it, all right? But don't go to those funding accounts in a gambling mindset that they're so cheap, I'm just going to try and gamble them, pass, and then, profit once I pass the evaluations. No, if you gamble, you're just reinforcing bad habits. And then once you're funding, you're going to blow the account. An example, I am a horrible golfer, but I like to golf. But when I go to but I won't take lessons, right? So I'll go to the practice range to practice hitting balls for when I want to golf. All I'm doing on that practice range is practicing my bad habits in golf. That's all I'm doing. And then when I go on the course, I'm just perfecting my bad shot. And that's no different than if you take these evaluations, it's a so low cost and you just try and gamble them up, you're just perfecting your bad habits and you're never going to succeed that way. So my advice is to treat, I don't care how low cost they are, treat each and every one and trade them the proper way. Next on the list is detailed personal trading metrics. I'm going to talk about that because we talked about A+ setups, we talked about profit taking, we talked about being result oriented. If you are not taking detailed statistics of each and every one of your trade, what time of day, what type of market condition, what is my A+ setups? If you're not, what is my risk versus reward on each trade? Am I only profiting one risk, but risking three? I mean, if you're not determining what your profit factor is for each trade, those stats will tell you what your strengths are, what your weaknesses are, where you need improvement, what you need to do less of, what you need to do more of. All right. How do you know you don't trade well in the afternoon if you have no statistics, okay, to back up such a feeling? And remember what we said earlier in the bias portion of this chat. Your feelings are wrong 50% of the time, unless, right, you need to back it up with data. All right. We do have Omni, okay, potent student. I believe that's his profile name. He does an excellent job in the room at keeping his own statistics. And I know for a fact that his statistics, his metrics have helped him grow his profits per trade just by him identifying what he does well, what he doesn't do well. So I strongly encourage each and every one of you to start taking detailed statistics, not only of your winning trades, but also of your losing trades, time of day. What was the market that day? Was the market up? Was the market down? What did the TPO chart look at the time? What did the candlestick chart look at the time if you're trading equities? Go as deep as possible in your trade reviews because you're going to spot patterns that work for you. And that is such a key. It's not patterns that work for JJ or Steve or Ray or others. It's patterns that work for you. And that is so, so important. All right. So next thing I wanted to talk about was learning collectively then alone. And Dr. Brent Steenberger mentions that often. that individuals, and he's really talking about S&B capital traders, tend to learn more together than they do alone. And we do see in our trading room, both on the ES side and especially on the equity side, that when a team are collaborating together, they're very successful. You see it especially in the mansion room, that both Eric and Marco and others run, how the group collectively are sharing best practices and how successful that is versus being isolating and not participating. The great thing about a trading room like ours at microefutures.com/equitiesetc.com, for those of you already who are not members listening to this, is you have that learning collectively together already built in, right? Especially if you understand that you know how to handle bias and not blindly follow other people, but take the good, what you're hearing from others, and use it, discard what doesn't work for you from others. It is very good, as Dr. Brett Steenberger said, to learn collectively. And our trading room does a really, really, really good job of it. In fact, that's what our trading room is about. It's not about promises of getting rich or having Lambos. It's really about learning and learning the proper way. I mean, if your trading experience does not extend to a variety of market cycles or conditions, and this goes back to learning collectively and also keeping detailed metrics, your trading business will be ill prepared to weather the shifts in volatility and trends. You've got to know how to trade in different markets. Someone might say, wow, man, what I just learned from JJ or Ray today, I found gold. If only I knew about this. I just had 3 straight winning trades. Usually when I see a post like that, I'm like, this individual's never going to make it as a trader, because the individual's looking, one, at a small sample size. 2, he's looking at a trade that just worked in today's trading environment versus over 100 different trades over multiple different types of trading environments that, we experience, because the markets are always changing. So again, your trading experience and metrics, you have to not be so quick to think that you arrived, that you've found gold, you found that magic bullet, whether it be market profile or a certain technical indicator on technical analysis. You have to understand that just because something will work briefly for you in a certain condition, it doesn't mean it's going to work forever. You have to be humble enough to realize that it's something that you continue to need to take statistics on, all right, and learn from others, okay, so they can give you feedback on that same pattern or same idea that you have. So I think that also is a big key for folks to understand, when it comes to trading. So, and I think generally the importance element of, of success in building a trading career, it's just really to be able to identify periods of underperformance as quickly as possible. And that goes back to those statistics before they create large drawdowns for you. The more you know about your trading, the average sizes or durations of your drawdowns, because drawdowns happen for everyone, and the variability around those averages, the better prepared you're going to be to identify departures from those norms. Keeping statistics, as I mentioned, on your trading, so you can highlight periods in which you're trading also particularly well, and to learn from those episodes and to share them with others. So that is one of the areas why I feel that having a trading room and being part of the trading room is such a key. Now, I'm not talking about a trading room where they just shout out alerts and everyone's just trying to make as much money as possible. Most of those trading rooms really fail their traders long term. And I'm not here to badmouth any trading room. We have our pros and cons also, but our trading room is pretty much trying to teach you what you're learning constantly, and from different individuals that have different trading styles. Now, the last bullet point, because I'm rambling on, is tough love words of encouragement. What do I mean by tough love words of encouragement? I've been accused in the past of just being brutally blunt with individuals in the trading room, and my motives are always good. It's to, to stop them before they have in their drawdowns, to stop their uh, delusions of grandeur, all right, to speak about what it takes to be a profitable trader. I'm pretty much trained, me personally, by some of the best individuals in the industry. If you think Brian Shannon, JC Parrott, Barry Einstein from Trade Ideas, those are some pretty heavyweights that I learned personally to train from, and also trained on the S&B Capital, business model of training. Mike Bellafiore and I both grew up in the same hometown in Port Jefferson, Long Island. And I highly respect what they teach at S&B Capital and have learned those best practices and methodologies over the years. What I'm getting at is nothing I'm sharing here goes outside those parameters. I was able to take, as I mentioned, the best from each of those that worked for my style and discard what didn't. Right. So when I talk from experience. So take what works, takes what doesn't. And that's why sometimes I let individuals know right up front, congratulations on a great day, a great week of trading, but you're doing it all wrong. You're just developing bad habits. All right. You just got lucky. You just got lucky. Unless you can prove to me statistically what you did works over a long period of time. If you're going to constantly do something the wrong way, you're just going to, and the more you develop bad habits in the beginning as a new trader, the more you're going to really hurt yourself long term. And that's what I'm trying to express a lot of times when I try to wake up people. And the other thing is, if everyone's doing something the same way, they're usually wrong. Right? Over 90% of traders fail, probably closer to 95% of the trailers. So if the majority, whether it's on social media, even within our trading room, thinks something's going to happen one way, they're usually wrong, because trading is not that many people succeed at trading. And we want you all to succeed at trading. The next thing you have to realize, get out of your mind. People think, well, I'm trading for freedom. I want to trade for freedom. If you're going to trade long term and have trading as your primary source of income or your only source of income, that freedom concept, get it out of your head. That's a marketing ploy that folks are trying to get you to sign up for whatever they're selling. If you're going to be a full-time professional trader and it's going to be your primary source of income, you're going to work more hours, more days than you ever imagined. It's just that's how it is. Okay. You have to put in insane amount of time. Trading is not easy. Trading is not stress-free if you're doing it for your primary source of income full time. Doesn't mean you can't trade recreationally, part-time, because you have outside sources of incoming and only taking super A+ setups. Yeah, that's different. All right. And which leads me that the most successful traders do have other outside sources of income coming in. They do not just rely on trading as their primary source because of that stress, because of that anxiety, because of all those hours I just mentioned. By having outside sources of income to supplement their trading, it enables them to be able to trade without the anxiety of paying their bills. So if you don't have outside sources of income, you really need to start looking at whether it be a side hustle, a part-time job, another way to generate income to supplement your trading. And also, when you start getting successful at trading, all right, yes, you want to have larger accounts, right? So you can trade larger. I understand that and I get that, and you should, but there's nothing wrong with when you get to the point where you can, let's say, withdraw 25% of your trading capital and invest it in something else that's passive or active income producing. So use your trading profits, not all of them, because you do want to build your account. Use your trading profits to invest in income producing assets on the side. And you'd be amazed over the years how that builds up, how you just created yourself a nice trading business, not only from trading, but from the outside sources of income that trading profits enabled you to do. All right. And I think that is a key. So get it out of your mind that you want to quit your 9-to-5 job, that you're making a lot of money, nothing wrong with that, and go strictly into trading. Okay. treat your 9 to 5 job as part of your trading business, because it's helping you trade successfully or learn how to trade successfully. And then in the future, you can either cut back on your 9 to 5, or you're making so many profits from trading. Or if you're young enough to take that opportunity, meaning you're young enough that you don't have the responsibility of children and a wife and you want to take the shot, try it. But understand, if you're not properly bankrolled, you're going to fail, because everyone hits drawdowns. Okay. So in my mind, it's better if you work, create a bank account of $50,000, $100,000. All right. So you can withstand drawdowns. I know folks will go, oh my God, if you think you're going to trade full time with $2,000, $5,000, $10,000, I got another thing coming from you. You're living in dreams of delusion. Okay. Right. Your chances of success are probably less than 1%. All right. And it's that I'm that serious in this. Go the funding route while you're learning, while you're still working, or get a part-time job so it enables you to work, to trade when you need to trade. So that's what I mean by tough love, because a lot of times I'll tell people what they don't want to hear, but what's reality. And the reality, this is going to blow your mind. And I really shouldn't be sharing this statistics. Okay. The far majority of members in our room leave. All right. Now they leave because they fail. The majority, they develop bad habits from the beginning. The average length of a member in our room is 2.3 months. That's it. And then they're gone. Now, those that do what they're supposed to do, those that end up staying, okay, they are not only succeeding, they are succeeding very well financially, as I mentioned. And I share that with you, is that we don't promise everyone that comes in our room is going to become a millionaire, because we can't determine your work ethics, what you learn, what you're doing on your own. Okay. If you listen, if you don't listen. All right. But those that do are highly successful. Unfortunately, most won't. They'll trade undercapitalized. They'll do every bad habit that I discussed on this session that I'm recording, and they'll leave. And we don't want that. So with that, that's the end of my tough love words of encouragement. If you have any feedback, you can direct message me at any time. I do not mind helping individuals. I tend now to try and stay more in the background in the trading room, but I do actively trade, especially actively swing trade. But if you need any assistance, you just let me know. I appreciate your time. I appreciate your efforts. I appreciate you being members. If you're not a member of our room, I mean, I think, what do we charge? $39 a month? Just try us for 1 month. You're going to get straight shooting from so many different traders, and we have something for everyone, whether it be futures, stocks, market profile, candlesticks, technical analysis, S&P capital training. We just offer so much, and we have such a team of moderators, educators, contributors, and even members. And we value everyone. We treat everyone with respect, or they won't be in our room. And that is including our growing list of wonderful female traders we have. And we make it extremely comfortable and welcoming for them, and all age groups from 21. I'm sure we have individuals under 21 in the room, all the way up to folks, I believe someone close to 80. All right. And it's a great community with happy hour events, making lifelong friends, meetups, get-togethers. We want to be more than just a trading room. We want to be a family. We want to be a community, and we welcome everyone. So just come around and check us out. And if you're not participating in our room and you're already a member of our room, we definitely encourage you to just post every now and then and say hello and give us feedback. So with that, take care, God bless, and have a wonderful day.